Hello everyone, welcome back to my channel. You are watching The Wealthy Brains, and now let's get in this video. Gary S. Wagner has been a technical market analyst for 25 years, a frequent contributor to Stocks and Commodities Magazine. He has also written for Futures Magazine as well as Barrons. He is the executive producer of the Gold Forecast, a daily video newsletter. He has been a speaker for financial seminars including Futures West and the Dow Jones Financial Symposium, which travels throughout the world. Co-author of Trading Applications of Japanese Candlestick Charting, a John Wiley publication. We have spoken about the multiple factors that have created bearish pressure on both gold and silver pricing. Of all these factors, there are two that seem to have the greatest impact on creating a negative market sentiment towards the safe haven assets, gold and silver. These are dollar strength, a direct result of rising yields for U.S. Treasury bonds and notes. According to Gary, from March 9 to March 11, both metals firmed as they gained value. After trading to an intraday low, March 8, of $1,672, the following 3 days would take the precious yellow metal to an intraday high of $1,739. Those gains, witnessed over 3 trading days, were the result of dollar weakness helped lower by falling treasury yields, as well as market participants actively buying the dip. Gary discusses how people are waiting for more stimulus, but the next program will likely not arrive until February. The economy continues to contract, and while some businesses are doing very well, others are being hit quite hard. The Fed has stated that interest rates will remain unchanged as they still have some options in their toolbox. We've had the most massive budget deficit on record at the $3 trillion to fund this crisis. There's still a lot of work to be done, and he expects that 2021 will be a similar or perhaps an even larger deficit than 2020. The government will likely continue bailing out specific sectors through next year. He likes silver as it will outperform gold during moves, but will also correct harder to the downside. There is a finite amount of both metals, and there will always be intrinsic value with these assets. This is why today's activity in both gold and silver is not reacting as severely to today's dollar strength and rising yields. It is a 180-degree pivot from the reaction, and in some cases, overreaction seen recently as the dollar gained, leading to the declining prices of 10-year notes selling for less and returning a higher yield. Gold futures bases the most active April 2021 COMEX contract trading in essence unchanged. Gold futures are currently fixed at $1,723. After factoring in today's gain of 50 cents, which is a 0.03% advance, concurrently the US dollar index is just up over 0.25% and currently fixed at 91.66. This can be clearly illustrated when we look at spot or physical gold pricing through the eyes of KGX. According to the index, spot gold is currently fixed at $1,725 after factoring in today's gain of $1.90. On closer inspection, we can see that market participants bid spot gold pricing higher by $6.70. However, in the case of spot or forex silver, which is lost of 19 cents in trading. Today's price decline had the same catalyst driving it, a combination of dollar strength which contributed 7 cents of today's decline, with the remaining decline of 12 cents directly attributable to the market participants bidding that precious metal lower. As reported in MarketWatch, Ross Norman, Chief Executive Officer at Metals Daily, said it's all about U.S. Treasury yields again, with a firm dollar compounding the problem for gold. He also tempered his bearish sentiment when he said, encouragingly, physical demand in Europe is fantastically good with supply chains challenged, and there's much of the same in China, where gold is now trading at a $10 an ounce premium over London prices, though exchange-traded fund demand is comparatively lackluster. All things being equal, gold did manage to end the week with fractional gains. April gold futures gained approximately 1.3% in trading this week, with silver gaining approximately 1 second percent. For the last 3 consecutive weeks, both gold and silver pricing had closed below its opening price on the start of the week. The greatest headwind currently keeping in check both gold and silver is a continued rise in treasury yields. Currently, the 10-year note is trading at approximately 1.62%, just a few ticks away from its recent price of 1.624%. The bearish market sentiment that has been so pronounced recently as it pertains to gold and silver seems to be consolidating, which could be indicating a short-term bottom. For the last 3 consecutive weeks, both gold and silver pricing had closed below its opening price on the start of the week. The fact that gold pricing held above $1,700 as it trades $25 above that price point is impressive considering that uphill battle that bullish market sentiment has been climbing. One issue is that quite perplexing is gold's timid to an almost absent reaction to the passage of President Biden's American Rescue Act, which he signed into law yesterday. Silver futures have not sustained the same type of damage in regards to its moving averages, with the most active May 2021 contract currently trading above both the 200 and 100-day moving averages. The 50-day moving average, which is currently fixed at $26.50, seems to be where current resistance resides. Silver's performance, which is far exceeded that of gold in terms of percentage gains, could very well be due to the fact that this metal has an industrial component and demand, which has been supportive of silver pricing as the U.S. equities markets continue to trade substantially higher. Silver is an example of a metal whose major industrial applications granted the ability to run strong in both times of prosperity, while its safe haven appeal lends it a strength in uncertainty. There were a few exceptional days in which we saw gold rise in double digits, and today was one of those days. Make no mistake, there were outside markets that had minor influences, but the overwhelming force driving gold prices higher were traders and investors buying the precious metal. Gold is currently fixed at $1,866.20. The green print of the Kitco Gold Index is a snapshot of prices that were taken. Gold was trading approximately 40 cents above current pricing at $1,866.40. Although there were fractional tailwinds provided by a failing and falling dollar that only amounted to gains of $2.20, the additional gain of $20.30 was due to traders bidding the precious metal higher, resulting in today's gains of $20.50. Gold futures basis, the most active COMEX contract, posted a gain of $29. Today's $29 gain took the most active futures contract to $1,867.60. Today's gains indicate that gold, at least for now, no longer remains range-bound and has broken above its strong resistance level, which occurred at approximately $1,852, the 200-day moving average. The significance of that move is that market technicians view a stock or commodity above the 200-day moving average as in a long-term bullish trend and below that moving average in a long-term bearish trend. Of course, if inflation does begin to ratchet up higher, it will have an extremely bullish impact on gold and silver because it will devalue the US dollar, which has an inverse relationship between the prices of those two precious metals. He also warned that investors should be prepared for the biggest inflation scare in America on the reopening of the economy since the early 1980s, when former Fed Chairman Paul Volcker crushed double-digit inflation by the late 1970s, which leads to the question he ponders, which is just how long-lasting will inflationary bout continue, and how the Federal Reserve will respond should that occur. Higher inflation will lead to higher gold and silver prices and have tremendous bearish implications for U.S. equities. Gold futures basis, the most active June 2021 COMEX contract, is currently fixed at $1,744.10. After closing yesterday at $1,756.50, the highest price since February of 26. Gold futures basis, the most active June 2021 COMEX contract, lost $14.10 in trading today. Meanwhile, silver basis, the most active May 2021 COMEX contract, lost 26 cents after gaining 28 cents. Currently, silver futures are fixed at $25.325. Gold prices have been under pressure for quite some time as a multitude of factors have been directly responsible for the lower pricing. Rising yields on 10-year U.S. Treasury notes, a strong dollar in the U.S., indices reaching all-time record highs on multiple occasions have directly attributed to the price declines witnessed in gold. The fact that both gold and silver hit intraday lows that put those metals in a technically oversold scenario, coupled with the fact that they occurred at key support levels and finally were followed by confirming candles, in both cases suggests that we could see both precious metals rally from this point. For that reason, that we believe it likely that we are witnessing is the end of this most recent leg of the correction and the beginning of a rally, whether it is a longer term move or just a short reversal that keeps both metals in a defined trading range is yet to be determined, he wrote. This is all for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.